Welcome to the deep dive, your express lane to clarity in the, well, let's be honest, the dizzying world of crypto. Today's September 13th, 2025, and the market isn't just moving, it feels like it's doing pirouettes. But don't worry, this deep dive is designed specifically to cut through all that noise. We'll give you the most crucial developments, and we'll pinpoint exactly what's driving the action, and importantly, what you absolutely need to watch next.
Yeah, and that mission feels more vital than ever today. As we unpack the news, it's pretty clear we're at a pivotal moment. The sheer volume, the magnitude of the information we're seeing, it really points to forces that could genuinely reshape this market. We're observing, strong institutional capital pouring in. There's a significant push towards clearer regulatory frameworks too. And on top of that, a macroeconomic backdrop that's, well, surprisingly supportive, especially with the Federal Reserve's anticipated moves. These are powerful currents. Definitely. And while they promise immense opportunity, they also signal, inherent complexity and potential for some significant volatility.
Okay, so let's zoom in on that big picture then. Because today's crypto market isn't just buzzing. You're right, it feels like it's undergoing a seismic transformation. This isn't just the usual retail enthusiasm anymore, is it? We're talking about institutional money, real traditional finance, leaning in a way we've really only anticipated until now.
That's exactly it. What's truly striking is the powerful convergence of these forces right now. Our analysis highlights billions, literally billions in institutional capital entering Bitcoin and Ethereum ETFs. That's huge. And at the same time, we're seeing meaningful progress towards regulatory clarity from the SEC. That's a significant de-risking factor for many. And then you layer on the macro environment, which, as I said, appears increasingly favorable, especially with the Fed potentially cutting interest rates next week. These aren't just isolated data points. They feel like foundational pillars. They're actively building a new, perhaps more mature phase for the market.
Right. And when we talk about the scale of impact, I mean, every indicator we're looking at suggests high importance. It really does feel like traditional finance isn't just dipping a toe in anymore, more like diving headfirst, validating this whole asset class on a scale we haven't really seen before.
Exactly. But this brings up a critical consideration, doesn't it? How do we reconcile these undeniable tailwinds, all this positive momentum, with the warnings our sources also include? Warnings about the market potentially being in a, quote, late-stage bull cycle and geopolitical risks that might not be fully priced in yet. It suggests a period of immense potential, certainly, but one that definitely demands heightened vigilance and a pretty nuanced understanding of risk.
Okay, so we've laid out that macro landscape. Let's zero in now on the titans themselves, Bitcoin and Ethereum. Bitcoin, as always, is commanding major attention. And the numbers for recent inflows are genuinely, well, eye-popping. Reports indicate a staggering $1.7 billion has flowed into Bitcoin ETFs in just 1 week, with a massive $642 million hitting on Friday alone. I mean, wow, that kind of capital injection has pushed Bitcoin's price above $115,000, marking a 3-week high. But here's a detail that really jumped out at me from the reports. BlackRock apparently moved $366 million from Ethereum to Bitcoin. What does such a clear directional reallocation from a major player like that tell us? Are they seeing Bitcoin as the ultimate safe haven here? Or is there maybe more at play regarding Ethereum's recent performance?
That BlackRock shift is incredibly telling, I agree. In the broader context, this kind of institutional influx into Bitcoin, coupled with, supportive miner behavior and those persistent Fed rate cut expectations, it strongly reinforces Bitcoin's narrative as digital gold or perhaps the primary store of value within the crypto ecosystem. It really does suggest a strategic pivot by some major institutions, signaling a potentially growing preference for Bitcoin's established resilience over, say, Ethereum's more development-centric and maybe currently more volatile ecosystem. Now, Ethereum, while it's still seeing substantial inflows like $406 million into ETH ETFs on Friday, pushing its price past $4,700, it does present a more complex picture. Fidelity launching $203 million in tokenized products on Ethereum. That's certainly positive for adoption, no doubt. However, that BlackRock reallocation we mentioned, plus reports of a quote, rare mass slashing event on the Ethereum network. That's where validators get heavily penalized for protocol violations, potentially affecting network trust and stability. Well, that combination could create some short-term selling pressure and maybe some concern. So while overall crypto sentiment seems positive, Ethereum might experience a more, let's say, nuanced market reaction compared to Bitcoin's clearer surge right now.
Okay, that makes sense. So while Bitcoin and Ethereum are navigating their own sort of unique currents, what's brewing in the broader altcoin arena, this is often where we see the most dramatic swings, right? And today seems like no exception. On the winning side, Solana is genuinely having a moment. It hit a 7-month high after Galaxy Digital acquired over $700 million in SOL. And the REX Osprey Solana ETF apparently soared past $200 million AUM. That's significant momentum. We're also seeing meme coins, believe it or not, like Pepecoin and Dogecoin rallying significantly. And there are whispers, actual whispers, of potential meme coin ETFs on the horizon next week. That's quite a development. And for stablecoins, Tether just launched USAT, a new stablecoin squarely aimed at the US market. What's the strategic implication there? Is this a big deal for adoption and liquidity?
Yeah, it's definitely notable. And a key observation here is the incredible evolution unfolding, particularly within DeFi and real world assets, or RWA. Platforms like Hyperliquid are hitting all time highs in trading volume. Some reports even indicate they're surpassing traditional giants like NASDAQ and Robinhood in certain metrics. That's truly astounding for a decentralized exchange, you have to admit. And then you have Wisdom Tree launching a tokenized private credit fund on Ethereum and Stellar, which essentially brings traditionally illiquid, high yield assets, think loans, directly onto the blockchain. That opens entirely new avenues for institutional participation in DeFi. That, plus a 5.04% TVL growth in RWA in just 7 days, it demonstrates a clear, undeniable shift towards institutional-grade decentralized finance. AI tokens are also getting a boost, with True launching an AI-native perpetual DX on Solana that highlights convergence with other hot tech trends. However, you're right, it's not all sunshine. MYX Finance experienced a pretty significant 33% drop after a $74 million withdrawal. Ouch. Tion Strategy stock fell 7.5% after converting to a Tion treasury company, maybe some uncertainty there. And XRP Whales reportedly offloaded 40 million coins despite all the surrounding ETF hype. Kind of a head scratcher. And crucially, a major security concern popped up: the SwissBorg SOL earned wallet exploit, resulting in $41.5 million lost due to a partner API compromise. This unfortunately just underscores the persistent, paramount need for vigilance and security across this entire digital asset space. It's always there.
Wow, $41.5 million. That's a stark reminder of the risks, for sure. Now, we've dissected the immediate impact of these movements. Let's zoom out again and consider the long game. How are things like regulations, adoption, and those broader market cycles shaping the future here?
All right, looking at the wider context, the long-term trajectory is, I think, undeniably influenced by regulatory clarity, or the lack thereof sometimes. Our analysis highlights that the SEC, under Chairman Paul Atkins, seems to be actively pursuing a, quote, customized regulatory framework for digital assets. Now, this is potentially a pivotal shift because instead of trying to force crypto into these, antiquated boxes, it acknowledges crypto's unique nature. That could provide a clearer, more stable legal foundation, and that could unlock unprecedented innovation and investment down the line.
Yeah.
Globally, we're seeing moves too. The CFTC has approved Polymarket for U.S. operations. Hong Kong Central Bank is easing crypto holding rules for banks. It shows a broader trend towards maybe embracing digital assets cautiously. And the Senate's ongoing progress with the Genius Act for stablecoins is also a really critical piece of this puzzle. Getting stablecoin regs right could unlock massive potential for global financial integration.
Yeah, that move towards bespoke regulatory frameworks, that could be a massive game changer for mainstream adoption, couldn't it? Reports indicate over 75 public companies have already quite quickly integrated Bitcoin treasury strategies. And there's growing speculation, though, speculation for now, that other nations might even follow suit with strategic crypto reserves. Imagine that. We're also seeing successful crypto IPOs from major players like Gemini and American Bitcoin, which further signals maturation, I suppose. But, okay, amidst all this optimism, there are some serious warnings emerging about the current bull cycle. You mentioned it earlier. Fidelity Digital Assets suggests we might be entering an acceleration phase. Increased volatility, a final surge maybe. JP Morgan, on the other hand, cautions the market might be overvalued, with geopolitical uncertainties and fiscal deficits not really priced in. So what exactly defines this acceleration phase they're talking about? Are there historical parallels that can guide our understanding of its unique risks and opportunities?
That's a crucial distinction to make. The acceleration phase, as suggested by Fidelity, it typically involves a period of really intense price appreciation, often fueled by widespread enthusiasm, FOMO perhaps, drawing in late-stage retail and institutional capital that maybe waited on the sidelines. Historically, these phases are characterized by rapid, almost parabolic gains, very exciting, but they're also accompanied by significantly increased volatility. And they often precede a period of consolidation or, correction, sometimes a sharp one. So while it indicates heightened activity, lots of buzz, it also points to undeniably heightened risk for investors who aren't strategically positioned. And the divergence in perspectives you mentioned between Fidelity and JP Morgan, that just underscores a complexity, immense opportunity, sure, but also the need for a very clear-eyed assessment of underlying value and these external risks.
Okay, that context is really helpful. So given all this dynamic information, this push and pull, What does this all mean for you, the listener, trying to navigate this incredibly active market? What are the key metrics we should really be watching closely right now? And what practical strategies can help manage these inherent risks?
A critical question, absolutely. To translate these observations into practical risk management, our analysis strongly recommends a few key strategies. First and foremost, monitoring those Bitcoin and Ethereum ETF flows is paramount. Keep an eye on that. Track the continuous positive inflows, yes, but also pay close attention to any significant shifts, like that BlackRock reallocation we discussed earlier. That tells a story. We've seen reports of over $1 billion in 24-hour ETF flows recently, so this is real-time capital movement happening fast. Then consider the Fear and Greed Index. Right now it's at a neutral 52, which is actually a slight dip from Greed 57 yesterday. That might indicate a more cautious digestion of recent news, which can be an early signal of shifting sentiment. Worth watching. Bitcoin dominance, it's fluctuating between about 55.2% and 56.6%. That's a telltale sign. Is money flowing into BTC as a safe haven, or is an altcoin season potentially brewing? Especially with the altcoin season index itself sitting pretty high at 71 out of 100. That suggests favorable conditions for certain altcoins to outperform Bitcoin, potentially. Now, in terms of practical risk management for this potential acceleration phase, diversification is absolutely essential. Cannot stress that enough. Don't put all your capital into one crypto asset, please. Balance your holdings. BTC, ETH, maybe consider smaller, high-potential altcoin allocations, and maybe even buffer with traditional assets to reduce overall portfolio risk. Staged position management helps too, things like dollar-cost averaging into positions, and importantly, taking partial profits as prices rise. That helps mitigate timing risks, particularly in a volatile market like this. Don't get too greedy. Always do your own research, DYR. Truly understand project fundamentals. Don't just follow the FUD or the FOMO on social media. Implement stop-loss orders. They can protect your capital from sudden, sharp price swings. Essential tool. And critically, stay hyper-aware of macro indicators. Fed policy, inflation reports, geopolitical tensions, these can significantly sway the entire market mood. Finally, and perhaps most importantly, given recent news, be vigilant about security, especially after incidents like that SwissBorg exploit. Choose reputable platforms with strong, proven security measures. Protect your assets.
That's incredibly actionable advice. Really practical stuff there. Now, looking just ahead, the next few days, the next week really, are absolutely packed with potential market movers. The big one, I think everyone's got their eyes on this, is the Fed's monetary policy decision next week. The market seems strongly anticipating a 25 basis point interest rate cut. How significant will this decision actually be, and what nuances should we be watching for?
Yeah. That Fed meeting is huge. A rate cut typically reduces borrowing costs across the economy, right? Which in turn tends to encourage investment in risk assets like crypto. And it could potentially weaken the US dollar, which often inversely correlates with Bitcoin. Now, while the market has largely priced in this 25 basis point cut, the nuance will be in the Fed's forward guidance. That's key. Will they signal more cuts are coming? Or will they adopt a more hawkish tone despite the cut, maybe citing inflation concerns? That will be paramount. A dovish stance could provide a sustained boost to growth and risk assets like crypto, but a more hawkish tone or any deviation from these strong expectations like no cut or a smaller one could easily trigger a significant market correction. So high stakes.
Definitely high stakes. Okay, also on the radar, we're apparently expecting the launch of REX, Osprey, XRP, and memecoin ETFs next week. That seems massive for bringing legitimacy and accessibility to those specific assets. Could unlock a new wave of capital, couldn't it? And finally, the second Senate vote for the Genius Act, the one aiming for clear stablecoin regulations, is on the horizon. Any news on that front could significantly impact the entire stablecoin market and the broader regulatory landscape, I imagine.
Absolutely. Both of those are critical events to watch next week. Successful ETF launches for XRP and, yes, even meme coins could lead to significant price rallies for those specific assets. It attracts more institutional and retail capital simply by making them more accessible through familiar traditional investment vehicles. Big potential there. And clarity from the Genius Act is just crucial for stablecoin adoption. It fosters trust, stability, which in turn impacts the broader crypto regulatory landscape significantly. It sets a precedent. Conversely, of course, delays or failures in either of these areas could create negative sentiment and likely increased volatility. So yeah, prepare for heightened market activity next week. And keep a very close eye on official news channels and any legislative updates as they unfold. It's going to be busy.
Whew. Okay, what an insightful deep dive into today's crypto market. That was a lot. We've seen incredible institutional flows, pivotal regulatory shifts potentially on the horizon, a really dynamic altcoin scene, all set against this backdrop of anticipated Fed actions. It's a lot to process, for sure, but it's clear the market is evolving at breakneck speed.
Indeed it is. And when you synthesize all this, you really see this blend of traditional finance integration happening, mixed with the inherent, volatility of a maturing but still relatively young asset class. It presents both immense opportunity and, let's be clear, significant risk. Understanding these intertwined forces, how they play off each other, is truly key to navigating whatever comes next, especially as the market finds its maybe new equilibrium.
Right. So as you step away from this deep dive today, maybe consider this provocative thought. In a market that's increasingly shaped by these institutional giants and this push for regulatory clarity, how will that original spirit of decentralized innovation continue to thrive and perhaps surprise us? Will this acceleration phase, if that's what it is, lead to genuinely new, unexpected paradigms that push the boundaries of finance? Or will it simply result in a bigger, maybe more volatile version of what we already know, just with more traditional players involved?
Something certainly worth pondering as you watch those key metrics and prepare for the potentially eventful week ahead.
Exactly. Well, thank you for joining us on this deep dive into the market report for September 13th, 2025. Until next time, keep learning, keep questioning, and keep exploring.